Mortgage Rates Live with the Mortgage Calculator. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in non-QM loans as well as your conventional VA, USDA, and FHA. Today I'm joined with our COO Kyle Hiersche and our sales manager Jose Gonzalez, who will go over a more detailed quote example like we usually do on the show today. So before we start here, let me go ahead and talk about something we're going to speak about today. As we mentioned, we specialize in non-QM loan programs, so this is really our specialty. Obviously, we can still do all the regular conventional FHA, VA, USDA stuff, but non-QM is really where our loan officers shine. So we have our non-QM loan programs. Typically, those are for self-employed borrowers to use bank statements or 1099s or some other alternative documentation forms. But today, we'll talk a little bit more about some specialty programs we have for even our ITIN borrowers who are not citizens yet. There's a few different reasons why someone might fit into an ITIN program. So we'll have Jose go into detail about that as a special kind of niche of the non-QM loan program. Those ITINs do have a little bit different on aspects to the LTV and whatnot. So we want to make sure that Jose will go through a detailed quote there and explain it. Now, let me go ahead and get started with the live rates today. So let me switch my screens real quick. And let me share it again. Okay, so here is our tool at the Mortgage Calculator. This is our pricing tool for our loan officers, our mortgage professionals. So again, this is a private tool that gives us live rates every morning. So since we are at about 11 a.m., the stock markets are open, we have live rates for this week. So we're going to see what's going on this morning. We're going to use this tool. We're going to just get an indication for the rates. If you want a full loan estimate, please reach out to one of our licensed loan officers. We are licensed in 16 states as of last week for primary second homes. And for investments, DSCR business purpose loans, which we love to do, we can do those in pretty much every state. So this will just be an indication to just check out the pricing this morning. We're going to do a few different scenarios like we do every morning. We're going to do an 80 LTV, typical purchase. We're going to set the price at 99. What that means is 1 point in buy down, which is typically our request from our customers these days is to buy the rate down a little bit. You can even do the temporary buy downs and some other crazy stuff with the high rate environment. But just to check it out, we will do 99 on all our quotes. That means 1 discount point in cost is what we'll pull up on all these quotes. We're going to do a conforming purchase for 30-year fixed at first. It's going to be primary single family. And for all of our shows here, we're going to use our office location here, Florida, Miami-Dade County. And for all of our scenarios, we will go ahead and use a 760 FICO and a 40 DTI for the estimate. And we're going to keep all these same basic settings for all of our quotes here this morning. So let's check out what the markets have today. Again, you can see this is a live tool, so we make sure that we're a real person here. So let me get through this. And we have some rates this morning. So these Fannie Mae Home Ready and Freddie Mac Home Possible programs are specialty programs, particularly for borrowers under an area median income, and also for great options for first-time home buyers there. But let's check out our standard programs because not everybody can qualify for that. So it looks like here is our first option for a conforming 30-year fixed, just standard. And the rate is 6125 for 0.75 in buy down. A couple other options here from different programs. You see different costs. So again, get with one of our licensed loan officers so that you can see which one of these programs fit best for you and find the one that has the best pricing. So it looks like the pricing went down a little bit on Friday when we did the show. I believe it was 625 was what the rates were coming up on for a primary. So again, that's why we love to do this show every day, just see what the markets are doing and go ahead and let everybody know and give full transparency. Now, for borrowers that do not qualify for conventional conforming, which is typically limited to under 50 DTI, we can go to a FHA loan. So let's pull up that real quick since that's usually our second most popular request. So under loan type, we're going to switch to FHA. Remember, we do have VA and we do have USDA, but those are for specialty situations. For VA, you as the borrower must qualify. You must have served and qualified for a VA loan. And if you do, we appreciate your service, but that doesn't apply to everybody. So we won't price that this morning. And then USDA, the property must qualify. USDA is for properties that are in rural areas. So if you have a property that you think might qualify for USDA, please get with one of our loan officers and they can price this for you instantly. But let's continue here with our FHA model. So if a borrower does not qualify conventional, needs a little bit more DTI or some of the other restrictions that afford us a little bit of leniency with FHA, we will go ahead and use that. Again, 80 LTV purchase, everything else is going to stay the same here. And let's check out what our FHA rates are. So here at the top of the list, looks like the 5625 for about 0.75 in buy down is about the best option. We have a few different other options at various prices, but that would be the best there. So 5.625, obviously a lower rate, but remember FHA does have some other costs and fees, such as the monthly mortgage insurance. So make sure to cue in on the APR here so that you can compare conventional, conforming, and of course the crazy non-QM loan programs that we're going to get into here in a second. We also have, there's some specialty stuff with FHA, like the disaster for those that were in the hurricane area. We also have access to, I think it'll pop up here, like the 203K to do, renovations and stuff. So a lot of different options within FHA as well. So we do have those available if you'd like to speak with one of our loan officers. Now, again, we will switch gears here since we have checked out the conforming and FHA. And if a customer doesn't qualify for either of those, what we really love here at the Mortgage Calculator are our expanded guidelines, aka non-QM, that we talked about earlier. This is what Jose will present in detail here in a minute, specifically for an ITIN borrower, someone who's not quite a U.S. citizen yet for various reasons. And Jose will explain how we can navigate that for them. So here we will pull up again a 80 LTV purchase using expanded guidelines this time for a primary home. And this would be for a borrower who doesn't qualify for conventional or FHA. So we will be able to use alternative income. Typically, these are our self-employed borrowers, as we went over on the little graphic earlier. So we typically grab our income verification, and our most popular request is for bank statements. But we do also have options for 1-year alt doc, 2-year alt doc, asset-related business bank statements, investor DSCR. That's our favorite. We'll get into that in a minute. For investment properties. And then, of course, our most popular are our personal bank statements for those borrowers that are self-employed in the gig economy, or we do a lot of like realtors that are purchasing properties and they want to qualify with their bank statements for 12 months because they're self-employed. And we will use those 12 months of personal bank statements to determine the DTI ratio so that we can qualify them. So if they don't qualify for conventional or FHA, we can still help them. And that's what we love these programs for. So these are going to be a little bit higher costs. Remember, these are expanded guidelines, non-QM. These are our funds out there that are offering these programs, basically portfolio products, right? They're specialty products, so they are going to be a little bit higher rates. So let's check out what we have this morning. So here is a great option for bank statements, 8% rate, but you see the points are a little bit crazy here. So that's probably just the top of that program. So we'd probably want to find a program that has more realistic discount points right here. 8.125 rate for 1 discount point in cost. So this is a great option for someone who may not qualify conventional or FHA, and we can still get them into a loan using their bank statements. You see here we have, as I love to say, a plethora of options here of bank statements, all kinds of different programs. You see different costs and rates. That is because there are various programs that are specialty for borrowers that may not qualify for other reasons, such as a credit event like a bankruptcy or a foreclosure or a short sale, things like that. These non-QM programs allow us to go not only above the regular DTI and use alternative income documentation, but also allow us to use these programs for different types of credit events and other things that disqualify borrowers for the standard programs. Now, before I pass it over, Jose will obviously go into a detailed example there about our ITINs. So he's going to pull up here non-permanent resident alien for a primary home. But now I'd like to switch gears to investment. So every morning I also want to check out the investment rates so everybody can get a feel for that. So for an investment property purchase, we'll still do the same thing, 80 LTV. We're going to check out the conforming purchase, 30-year fixed. Everything else is going to stay the same. And we're going to see what rates the Fannie and Freddie government-sponsored entities are offering on investment properties. Now, keep in mind, Fannie and Freddie, the government-sponsored entities, added an extra penalty late in 2021, I believe, where they have a lot of extra costs added to second homes and investments. So you see here we have some rates that are decent, but you'll see very high costs here on all of these. So just keep in mind that that's not us as a lender. That's not any of us here in the industry as a mortgage companies, that is Fannie and Freddie added that because they wanted to change their mix of the properties that are in their portfolios. So here we have a great option at 6.625 rate. See here a little bit of discount points there, 3125. A borrower may want a little bit higher rate to go down in discount points, but you see there's a lot of different options here. Still nothing really down into the one discount point option. So typically our borrowers are leaning towards non-QM options for investment properties, particularly because of these extra fees, basically, that the government-sponsored entities have added to the conventional loans for investment properties. So still got some great rates. If you qualify full doc, if you have full tax return income, this is great. You can still qualify. Just keep in mind there are some extra costs now with those programs. So our more popular options now, what our investors are typically leaning towards are our non-QM programs for investment. So I'll click over to investment. We'll still do ADLTV. And instead of conforming, we'll click on expanded guidelines so we can see all of our non-QM options and check out what those are looking like today for an investment purchase. Now, for income verification for the non-QM investment property purchases, we can obviously do any of these income documentations, but the most popular by far, and the one that we love here at the Mortgage Calculator, are investor DSCR programs. That means as there is no income and there is no employment documentation for our investors to purchase investment property. This also becomes a business purpose loan, so we can do it in a lot of different states that allow us basically to serve our investors that have properties in multiple states. So a lot of great options that we have with the DSCR programs. Now with the non-QM programs, if we're an investment property, we're typically always going to add a prepayment penalty. Of course, we can have no prepayment if we wish, but typically we do a 3-year prepayment just to do the pricing. If you want a no prepayment or a 1-year prepayment, that's no problem. It'll just have a little bit more in cost. So everything else is still the same. Remember, ADLTV purchase, this is going to be with no employment, no income verification whatsoever. And you'll see the rates will be a little bit higher than what we just saw for conforming, but the points will be much less. A lot of our investors are more interested in cash out of pocket, so less points and fees than rate, right? As long as the cash flow covers, which is what this program is all about. This DSCR program means that the cash flow from the rent of the property covers more than 1.25 times the PITIA, the cost of that property. So this would be for a high cash flowing property, a little bit better rate and terms here. This would be for a pretty standard cash flowing property from 1 to 1.24. Again, get with our loan officers. They'll explain all the ins and outs of the DSCR ratios, help you calculate your DSCR ratio, and find the program that works best for you. But here are some great options for, you saw rates were in the 7s for the conforming, rates are in the 8s here for DSCR, but the points are much less. Remember, 3 points was about the conforming. Right now, we're even less than 1 discount point here for this 8.875 rate, which is a great option. Again, DSCR allows us all kinds of expanded options for credit events and whatnot. So there are a ton of programs here at different rates and costs, and those are all basically specialty programs. So just get with one of our loan officers. They can wheel and deal through all these different programs and find the one that fits best for you. So that's basically it for our quick pricer here. So what I'd like to do now is introduce Jose, who can explain a little bit more about our ITIN program and our non-QM programs as it applies to not. We talked about foreign nationals last week a little bit. ITIN borrower would be different than a foreign national, and Jose can kind of explain what that means, I guess, Jose, first, and then I'll go ahead and grab your quote and pull it up. So why don't you go ahead and take over, buddy?
All right. How's everybody going? ITIN programs, a very good program for borrowers that do not have full status in this country, but are paying taxes for at least the last 2 years, have some type of verifiable income. Now, I'm going to state that an ITIN is not a foreign national. The only place that they're similar is that neither have legal status of being a permanent resident nor citizen of the United States. But the main difference is that the ITIN has U.S. based credit, or their qualification is going to be based on U.S. based credit. So they need U.S. based credit. And the ITIN borrower is also has U.S. based income. For a foreign national, the income cannot be U.S. based, and the credit does not have to be U.S. based either. So very important distinction, because a lot of times we get borrowers and MLOs confusing what exactly is an ITIN borrower or an ITIN based loan versus a foreign national. Now, ITIN, ITIN stands for International Tax ID Number. So the borrower who has the quote unquote ITIN will need to have that document in force and valid at the time of application and at the time of closing. However, what does that mean? And Nick, if you could share the screen, here we
There you
go.
go.
Beautiful. Now, here we see the scenario where we have an I-10 borrower purchasing a property, 20% down, full doc, right? So that means we're going to verify with either tax returns or pay stubs, W-2s, in the traditional full doc manner that you would for any type of loan, be it a QM loan or a non QM loan. You will note that the minimum cost is 0.75 of a point, $3,000 for a $400,000 loan at a 10.375% interest rate, with buy down possible down to $10,000, 9.25% rate, which is 2.5 points. So there are multiple options here for this primary borrower to be able to be financed for a loan purchase without having their legal status. In other words, they do not have to have their permanent residency, they do not have to have their citizenship. The document requirements are going to vary from investor to investor, and by investor we're talking about who we sell the loans to. Um, Typically, they're going to be, full doc type deal, but there are some scenarios where in the ITIN loan they will allow alternative documentation like bank statements or 1099s. But there does have to be some type of income verification for the primary and second home ITIN borrowers. Um, there is, I believe, also one or two options out there for an I-10 borrower going DSCR, but those are very few and far between. The majority of our I-10 borrowers tend to go, are refinancing or purchasing their primary home or their second home. Um, and we do give them these very good options. But again, do not confuse the I-10 borrower with the foreign national borrower, because again, the I-10 borrower is working in the United States and claiming income and paying taxes on their earnings in the U.S.
So
And
Jose, can you just explain real quick that the typical borrower, maybe like the couple of I-10s I did were, um, for example, they were self-employed still because they were like contractors, right? That's a typical, person who doesn't quite have legal status but is doing contracting work or landscaping, things like that, right? Is that? Can you just explain about how they would actually be reporting that income and documenting it, so they can give an example of the
absolutely.
type of borrower that this would be?
Most borrowers, like Nick mentioned, in that manner, will receive usually a 1099 from whoever they're contracting to work. Because obviously they don't have a social security number, they have an ITIN, present sometimes certain complications for employers. So they just prefer most of the time to give them a 1099, and then the ITIN borrower just has to claim. Now there are, again, 1099 options and bank statement option, and then depending on the guidelines, the 1099 will be treated a certain way. There may be an adjustment, 20, 25, 30% expense factor built into the 1099 to arrive at your net income, which is the income then that we would use to calculate the earnings. Similar to when you have a self-employed borrower, you run them, through the income calculator, backing out expenses to arrive at a net income. It's the same manner with the 1099, but just depending on whose guidelines we're using, we're going to have to adjust the gross amount reported on the 1099 by the expense factor, because they figure they are going to claim some type of expenses to arrive at our net income, divide by 12, and there you have your monthly income.
Beautiful. Let me pass it over to Kyle, who can just go over the next steps if someone wants to get a quote from one of our programs.
Yeah, absolutely. Thank you, Nick. So I just want to mention before we get into that, just how amazing the opportunity here is, especially with those DSCR loans with the foreign national, and then also the ITIN borrowers. So great opportunity, whether you're a client, whether you are a realtor or a loan officer, and are able to place people in these programs and allow them to purchase homes here in the United States. So with that being said, we have 350 loan officers all across the country. We can do loans in over 15 states. The DSCR loans we can do in quite a few states more. And we can connect you with a loan officer. So if you're already working with one of our loan officers, that's amazing. Get with them to talk about some of these programs. If not, you can go to themortgagecalculator.com, which is right there, and we can pair you with one of our loan officers. And our loan officers are trained to not only help you with conventional FHA, VA, USDA, like most loan officers are. Our loan officers are actually consultants that take it above and beyond what most loan officers can do with all these type of programs. So our loan officers are trained specifically not only in those regular areas, but also in non-QM loans and investor loans. So you can email us at info@themortgagecalculator.com for us to pair you up with one of our loan officers, or you can go to themortgagecalculator.com and we can do the same. So thank you everybody for tuning in. We do this every single weekday at 11 a.m. So if you want to tune in tomorrow, go ahead and check us out, and we will see you then. Thank you, Nick. Thank you, Jose. Thanks for tuning in, everyone.